So I'm Rebecca Burke. I'm partner at McGuireWoods in our private equity group. Really look forward to the panel today. What do capital partners look for in an independent sponsor? We're going to go down the panel and introduce ourselves quickly.
Good morning, Christian Albert from Bowside Capital. We're a Charleston, South Carolina based investor in independent sponsor transactions. We look to make 6 to 8 platform investments per year, sort of at a run rate of about 100 million of capital deployment.
Good morning, Renny C, Boyne Capital. We're a lower middle market focused PE fund in Miami, Florida. Been around since 2006, where our founder started his roots as an independent sponsor. Now deploying capital out of our second institutional fund.
Good morning, Jeff Sangalis. I'm with ORIX Private Equity Solutions. We started our group in 2012, and we basically exist to provide equity to independent sponsors and have done 40 equity deals over that time with independent sponsors to the tune of 650 million or so. So generally invest 10 to 20 million dollars in equity and an occasional debt piece as well, but that's secondary.
Morning, everybody. Whit with Aberdeen Standard Investments. I guess now we're just going by Aberdeen. We rebranded. I'm part of a 12-person team based in Boston, focused on all things small cap private equity investing in the U.S. We're currently investing out of our 9th fund. It's a $500 million vehicle. We'll do both fund commitments out of that vehicle and independent sponsor deals and co-investments. And so we've got a pretty strong track record of having partnered with independent sponsors and supporting them in one-off deals. And we've done a number of groups where we've kind of taken them through from the unfunded model to the funded model.
My name's my name's Eric Taylor, founder of Trident. We've been around since 2017. We specifically do independent sponsor deals. We're generally writing $5 to $30 million checks across 3 core sectors: industrials, consumer, and healthcare. We've deployed about $40 million across 5 deals over the last 4 years, and we're now deploying out of our Fund 1, which is a $250 million vehicle. So I'm generally looking to write $15 million average checks, but anywhere, 5 to 30 is our really sweet spot.
Well, a wonderful panel of capital providers up here. And one of the things we want to focus on initially is specifically, you all come from different funds. How does the profile of the capital partner dictate the type of independent sponsor you work with?
Yeah, maybe I'll jump off from just the Aberdeen standpoint. I think, one of the, lessons learned as we've spent more and more time kind of getting to know this community is there's definitely different profiles of independent sponsors that are out there. Our model, it's particular to us and it's not particular to everybody, but we're typically partnering with independent sponsors who have traditional kind of GP training and background. That's just the profile that we're set up best to support. There are kind of more operating oriented sponsors that have a super reason to exist. We're just not set up to support that model. So for us, we're traditionally looking for somebody who's spent kind of a decade plus on the traditional kind of GP side of the table before kind of jumping over to the independent sponsor world.
Yeah, I'd follow on probably because we're a bit of a similar approach where we're looking to back investment teams. I think that's the way to think about it, that have had that training, whether it be 10 or 20 years at a more institutional fund. And part of that is just to make life easier for everybody because we have a certain institutional need for what the reporting looks like and the timeline that reporting comes out on. And it's just much easier if somebody's been trained and is used to that and the request doesn't fall as like, well, nobody's ever asked me that before. So operators are very successful independent sponsors. That's just not the model that we've really backed because it's not an investment firm per se.
So I can offer the other side of that. So we look to back independent sponsors who bring value to the transaction. For us, it's not a prerequisite that they used to be a GP because that's why we're there to help them with the transaction execution and then the infrastructure surrounding the transaction and then onboarding portfolio companies, which we can provide as well. So somebody who's looking for a partner to scale and grow either their business or the target portfolio companies.
Yeah, I'll say we do a bit of both. If you look at our portfolio, 60% of it is made up of sponsors who are teams of anywhere between 3 and 10. The other 40% are individuals who are, it might be an individual and a secondary person, but they're sort of true operators in that sense. So we do both.
Only difference I think I'd add potentially for us is we really want hands-on, proactive, independent sponsors that have a playbook to execute and that want to partner with us. So we may talk a little bit later about what role everybody plays. We really want to have partners that are hands-on, and most of our independent sponsors are on the smaller end. They may have a handful of companies, but not many companies, because we want them really working their companies. And so that's worked out well for us. And then lastly, most of ours have areas of focus. We're generalists. And one of the ways we hopefully stay out of trouble is by working with pros in that area, or they're very good at bringing in operating partners with them at the outset.
I think that sector expertise is a critical characteristic these days.
Yeah.
But, in terms of team size, just to follow on, we do struggle with that one-man team just because of the key man risk that's associated with it. And we are, I think the term indirect investors, in the sense we're not looking for board seats or controlling the board. That's really why we say we're backing an investment team or investment firm, because that's their job to have that value creation plan. But if it's a one-man or one-woman show and somebody's hit by the proverbial bus, we don't want to be left in that role of managing the investment.
So there's definitely some common themes I think the capital providers look for with independent sponsors. And this panel up here all works regularly with independent sponsors. Would love to know what you think an independent sponsor should be thinking of when they reach out to a capital provider.
Well, I think McLean took all of our thunder there towards the end. Are you still here, David? No, probably not. I think independent sponsors so often, you want to get your deal done. That's first and foremost. But in this market, you're going to get your deal done. And I think, that independent sponsors should really be looking at who their partner is. What are the roles going to be? Different. And we just talked about there's different roles. What's everybody's roles with the independent sponsor versus the capital provider? Are they in support of your value creation plan? Frankly, do you like them? I mean, this is a 5-6 year, it could be 3, but it's a long-term kind of situation. So I think, if people, independent sponsors need to spend more time with that. And then, is this their first rodeo? Is this a hobby? Do they add on capital? I don't know if the model, needs it or not, but those are the kind of things that I think that, aren't economics that really can drive for a good partnership.
I would just tack onto that. I mean, we generally consider ourselves a really flexible equity capital provider. That flexibility is going to be based on the level of sophistication within a specific subsector that the independent sponsor has. If we feel like there is a network or a set of skills or a proprietary approach that sponsor has that is really difficult to replicate, difficult to find, we like to say on our team that you've got an unfair advantage when it comes to this niche of the world, that enhances our flexibility and frankly makes our jobs easier, not only in diligence, but also post-transaction. When we start talking about, what people's roles are, our preference is to really be hands off. And if things are going up and to the right, there's some folks that we partner with in this room, you're not going to get calls from us every week.
Yeah, I think from our perspective is we just kind of reflect on the top of the funnel, if you will, and what we see from independent sponsors. There's groups on one side that bring us, 1 or 2 really quality things that fit with their background and their sector expertise, a year, and those things are great. And I think we always take those seriously. I think one of the things that we struggle with a lot is there's no shortage of folks who are reaching out to us and showing us deals that are really, really early stage. And we get there's a chicken and egg phenomenon in here in terms of trying to lock up the deal and all that stuff. But I guess I would just encourage folks, right, throwing a dozen things at us in a year and kind of hoping one of those is going to stick is probably not the right long-term model for the relationship that we're looking for. And again, we get that it's difficult, but just encourage folks to be like, really thoughtful about the stuff that they're ultimately trying to kind of throw over the fence to us.
I think there's no one size fits all. You know, I think independent sponsors need to look at, like what Jeff said, you have to like your potential partner, just kind of like a marriage, right? It's 3 to 5 years at minimum. So do you see eye to eye? It's probably, you know, one of the biggest red flag, for lack of better terms. And also there's different type of capital providers, just like how we, you know, have different views on things. Like whether the capital provider is giving you something else other than just capital, right? Whether it's infrastructure to grow or the support with hiring people and helping you with add-ons and M&A execution and stuff like that. And I think from the years that Boyne learned being an independent sponsor and back in the early days, not having that ability to do a capital call when time of distress comes, do you have a capital provider that understands that when times are tough, can you actually support your partner in that relationship? I think that's pretty important. So,
I mean, the trusting the partner is probably the key point there out of that. Someone once made a comment to me probably 10 years ago that the only people with capital being deployed during the Great Recession in 08-09 were the fund-to-funds universe. And everybody seemed to forget that. And then it became apparent to me again last year when the pandemic hit, the family office community all went and stuck their head in the sand. And we did a number of transactions through May, June, September timeframe. And I knew that our peer group was as well, but we were kind of the only people standing up, kind of looking forward. So these are key things that you want to tease out when you're building your capital provider relationships as well, is are they there in the tough times? Are there capital available for the follow-ons? All of that different angle.
Yeah. And Renny, I love your analogy to a marriage, because it really is in a lot of ways like a long-term partnership that people need to see eye to eye and have some give and take. And so as you think through, a big part of all your jobs is thinking about deals, sourcing deals, meeting people, networking. How do independent sponsors help that? And how is that kind of a relationship where there's give and take, to Renny's point, like a marriage for you guys?
okay. Can you repeat the question?
How do you use independent sponsors to help source deals? And how do you view an independent sponsor in kind of adding value to that process?
Gotcha. So we don't really view independent sponsors as a deal source,
Okay.
only deal source. Like, of course, they're bringing us deals, but what we seek in them is actually somebody who can add value to the transaction. And most of the time, it means that they have sector expertise, just like how you guys said that it's, you know, become critical, or they, because of that industry expertise, they were able to source this other deal we would otherwise have been able to. Right. So, and then also, like, we've seen situations where we back someone who's an independent sponsor, but willing to like roll their sleeves and actually jump in as CEO. So those are the types of independent sponsor and partners we're looking for. In terms of, you know, sourcing deals, that's gravy.
I think for us, relationships are give and take, and obviously, like, let's not fool ourselves. If you're coming to me at the transaction, the number one thing you want is capital. So I'm not going to act like, you know, you like me because of my tie, but we have more to offer, right? We've got an advisory board made up of folks like Clarence Otis, who's the former CEO of Darden, right? You know, ran Olive Garden, Red Lobster. He's got value to provide if you're doing stuff in restaurants. You know, Robert Smith from Vista is, you know, our top LP and anchor investor. So if you're doing something in enterprise software, we've got resources to tack on. I think, you know, obviously the assumption is that the sponsor is coming with the expertise required, as mentioned, but, you know, we'd like to think that we have more to provide than just capital. And you know, we've got a playbook of resources that folks can tap into.
I think from Aberdeen's perspective, just given that we've been in this ecosystem for a while, we've been making fund commitments in the lower middle market for 2 decades now. You know, we have 50 plus active GP relationships, right? So that just the number of portfolio companies that we have access to and that we've seen kind of get sold up the food chain, you know, over the years is pretty darn broad. So that there's almost no deal that comes kind of over to us that we can't quickly triangulate on, what do we need to know? How can we get smart? Who can be helpful in our network, and how can we potentially help add value? Should we partner with the sponsor, after that? And so we found that just where we kind of sit in the ecosystem, given that we're doing fund commitments and given that we're doing, direct deals with the independent sponsors, that part of our kind of ecosystem has been additive to a lot of deals that we've done with independent sponsors over the years.
Yeah, it's the pattern recognition that comes from it. As Jeff said, you've done 40 plus. We've done probably somewhere near the same, and the average is probably the same, moving along that way. So we're never going to claim to be the sector expert.
We're slightly different though, back to the deal sourcing question. We work through y'all. I mean, that's what we do. And if we get deals in that we think fit one of our independent sponsors, we pass them on that way. You won't see us doing, because we're so focused on this space and have been for years, you won't see us doing an end around and, doing a deal on our own or anything of that like. So we depend on the partnership with the independent sponsors, and, most of the flow comes this way, clearly. But if we have something that is applicable to our partners, we send it out depending on their bandwidth and their expertise.
And Christian, you've flagged some of the impacts on the work you do from the Great Recession and from the pandemic. How has your work over the past 5 years changed with independent sponsors, and how do you see it in the future changing?
I would say every process evolves over time as you get better at what you're doing. But we've always approached the market as sponsor first, deal second. We know there's some peers out there that come at the other direction. So we spend a lot of time getting to know people because we want them to know us as well. And that doesn't lend itself if somebody comes to knock on our door for the first time and say they've got a deal under LOI and they want to close in 45 days. We're sort of quite upfront about saying we're not candidates. Everybody's got their own diligence process on the sponsor, but it's time consuming. It's an investment of time on our part, on their part. And you're making a very long-term relationship, which hopefully is not just about one investment, but about multiple investments over years. So, the trick for us is finding what's the right moments to do that work. And that's what, it's continuing balance.
Yeah.
I'm sure everybody in this room is kind of drinking the Kool-Aid around independent sponsors and the deals that they can do and where they play in the ecosystem. And I think unequivocally that is true, right? And the attendees and the number of people just sitting in this room and the rooms, next to us is a testament to that. So Jeff and his colleagues have been at the front end of doing this for a decade. If you looked at our program, we were a regular way fund of funds a decade ago. There's no ifs, ands, or buts around that. We were doing lower middle market fund commitments. And that was all we were doing. And if you kind of look at where we've gone over the last decade from our fund 4 or 5 to our fund 9 today, there's been a clear evolution to doing more and more co-investments or indirect deals with the independent sponsor community. And what I think is fascinating in terms of what's playing out right now, and I've talked to a handful of folks in the room already about this, over the last day or so, is unequivocally the regular way funded lower middle market managers are competing against the best institutional independent sponsors. That is happening unequivocally. And if you want to be in the flow of the very best deals, this is clearly a part of the ecosystem that you have to be touching. And so, in our program today, if we look at the co-investments we've done over the last 2 years, it's been about 50% of those have been with independent sponsors. If you looked at that number 5 years ago, we've maybe done 1 or 2 independent sponsor deals. And so it's clearly just the evolution of travel in our direction.
Well, a lot of it's credibility, right? I mean, the bankers, the boutique brokers, the boutique investment bankers, go back 5 years ago. I can remember a phone conversation. It's like, please tell me you've got the money here, because I've got a funded sponsor over here that will pay more than your guy will. And it was hard for credibility, but now they're clearly competing because bankers know that y'all can get it done.
And look, if I were an independent sponsor, I would take advantage of that, right? Be aggressive when it comes to reaching out to folks like us to get support and processes. I think part of our jobs here is to be supportive of not only you, but like the market in general. I think, we're here because we've seen the secular growth over the last 5 years. We think the next 5 is going to be stronger than the last.
I think for us, nothing much has evolved since 5 years partly because, Derek McDowell, our founder, always started that way as an independent sponsor. And going forward, since we invested out of our first institutional fund, I think, I want to say like maybe 40% of our platforms are actually either independent sponsor led or independent sponsor source. And up to today, also like we see a lot of deals coming from independent sponsors, and a lot of it has to do with like them appreciating our roots, that we were in your shoes before, like we understand the challenges and also the benefits of not having a committed fund. Right. So I think, Eric said, you can be aggressive, like take advantage of that. It could be a great partnership, right? Like when you have the deals and we have the capital. So.
And Whit, you touched on the interplay between investment bankers and independent sponsors. Just in my day-to-day, I've seen a real shift over the past few years in investment bankers and their views on independent sponsors. And do you feel like that's becoming more of a part of the ecosystem and more of an acknowledged part of the ecosystem?
I'd agree it's becoming more a part of the ecosystem, but I would say opportunities sourced directly from independent sponsors themselves without a business broker involved are still the vast majority, of what we're seeing. So I'm probably not well positioned to say is that an advantage route for certain independent sponsors to go out there, find the Aberdeens and the ORIXs of the world, because there's certainly value in that. And, I think one of the, anecdotes that, we regularly share is that, by definition, everybody that's kind of sitting in this room and kind of calls themselves an independent sponsor is likely a good investor. They've done a deal somewhere and they have a reason to have some credibility. What they haven't necessarily done is gone out and kind of shake the tin can for LP capital, right? And that is a different skill set, right? There's a longer form conversation here around, the path to raising a fund and raising a team and all that stuff that comes with that. So certainly the investment banking community can play a valuable kind of role in this. And again, from Aberdeen's perspective, we've just had people kind of out on the ground, kind of wearing out the shoe leather, that it feels like the top of the funnel is kind of big enough today for us that we're just doing less of that, but we're certainly seeing more kind of bankers get involved in processes.
Does anyone else see it, Renny?
Yeah, so my primary function at Boyne is deal originations. As such, like I also deal with investment bankers and stuff. And I do see more competitions coming from independent sponsors. That's right. But, there's always something for everyone. But yeah, I would agree with that.
Yeah, I would totally agree. I think what we are witnessing and will continue to witness is the disintermediation of both bankers and frankly, lower middle market private equity firms. It's just the reality. I mean, I'm from Texas myself. I'm from Southern Texas. I'm from a place where folks don't like carpetbaggers. And an independent sponsor from my area who has a niche particular set of skills or background, I think is going to be the best candidate to source deals locally. And I think you're going to continue to see that as more stories get written about it, as more capital providers come into the market, as folks like us continue to raise larger and larger funds.
It's still a leap of faith for the investment bankers to prioritize the independent sponsor over a funded group when it's one-on-one. And that's where groups like us who are sitting there saying we've worked with them, we act as references, it helps a lot getting over.
Yeah. 100%. And you all worked a lot with independent sponsors. You've done a lot of deals with and without. What do you see just across all your dealings as being common themes of really successful independent sponsors? I know we've hit on some of them, but if you could each highlight what you view as kind of the most common theme of successful independent sponsors, I think that'd be.
I mean, you said it before, right? I think getting the GP part of the decision right is a huge part of this, right? So it's great if we like the deal, but we are going to underwrite you and your team and where you came from, and for better or for worse, at some point to get us over the finish line, we're going to do that full underwriting of you, the GP, and your team. And so the punchline there is just transparency, right? And so whether it's references, whether it's former CEOs, you've got to be an open book if you really want to be successful for the long term. And so that probably sounds easy, but it's, you know, you are going to undergo at some point what is the equivalent of what people probably think of as a fund underwriting. And that just requires a lot of transparency. We're going to do off-list reference calls. We're going to call folks you worked with before. And that's just how we're kind of set up to run. It doesn't mean everybody's approaching it that way, but just transparency at the end of the day is just super important.
Yeah, I mean, I'll give you a peek into our investment process. We will literally have a conversation about the quality of the thesis of a particular sponsor. The best deals I think that we'll end up doing are ones where we meet the sponsor first. We talk about their thesis, we talk about what they're seeing in the market, and then they find a transaction that later meets that need or fits squarely in that particular thesis. So, you know, for us, we like meeting folks early. We want to build a relationship. If you have a deal to do, great. If you don't, great. But matching the thesis to a particular target company, that's where our investment committee says, okay, wow, this makes a lot of sense. This feels good. We know this particular group. You know, let's try to fast track this and move forward.
I don't really have much to add in terms of due diligence, but what I think makes independent sponsors successful over the long haul, and we've seen it, is it's just kind of like fundraising too. Stick to your knitting. You know, there's different skill sets at different independent sponsors. Know what you're good at. Don't overcommit. We see the best success when they don't have too many companies and they really work them. So proactive, hands-on skill set. Stick to your knitting. It's a good formula.
Yeah, I would echo all of that. Don't have anything much to add, unfortunately.
You know, qualify who's the investor group you're approaching. Understand what their needs are. Be responsive to those needs. We've seen a couple of instances over time with some independent sponsors who've been operating the model for a long, long time, who almost felt that they were past that point of needing to go through the reference calls and all the other diligence checks that we would be doing. So just understand, if you're used to having lunch with an investor and they'll sign on the dotted line, that's going to be different than the approach that we or an institution are going to take.
And so we've touched on this a bit, and one of the things that we're committed to is wrapping up the for a networking break. But we do have a couple minutes left, and just any thoughts as we're coming out of a pandemic where I think everyone's cautiously optimistic the next year is going to be, you know, a good year, a busy year, that you think as an independent sponsor sitting here in a room of really, really kind of successful capital providers you would want to get across to the audience today?
From my perspective, and this goes back to, you know, to your comment and the comment just on, you guys are competing against lower middle market funded folks, but I do really think that for the very best companies in this part of the ecosystem, price is not always going to be the thing that wins the day. It will be for a lot of deals, but partnership is probably the thing that should win the day for the very, very best deals. And so I would just encourage the independent sponsors, you know, here today, right? Build those relationships with the sellers and the entrepreneurs such that they want to partner with you, you know, regardless if kind of the terms on the table are kind of a term less, because I do think this world is becoming more institutional. It clearly is. And I do think that the unfunded, the independent sponsor universe is going to continue to win some of the very best deals that we would have thought in the past, just the traditional funded guys, you know, would be winning. So it's just focusing on building those partnerships. I really do truly think there's great opportunities out there to be had for this ecosystem.
Can I shift? I'm just gonna,
Yeah, please.
I'm an audible. So there's 880 some people here for our panel. And so this has all happened when everything goes up. There's some of the younger generation never seen I guess there's recession. I guess we're going to see another one. So what happens to our industry or this sector industry in a meaningful recession? We didn't script this, by the way. But
It's a great question.
you know, I mean, what really happens right now? Everything just keeps going up and everybody makes money. It's good. The senior banks are good. the investors are good, the independent sponsors are good. What happens in a recession?
I mean, from my perspective, we're buying. If you bought anything in 2009, 10, 11, 12, you absolutely murdered it over the following 3 to 5 years. So that's what we would do. Just a reference, the delta between a lot of companies, I think, going under versus staying afloat last year was hustle. I mean, we had 40% of our portfolio where revenues literally went to zero for a three to 6 month period. We have a company that derived 50% of its revenues from all you can eat buffets. So I've seen some stuff. But what I can tell you is that, now we're back up 20% from an EBITDA perspective, and the largest Golden Corral franchisee in the country filed for bankruptcy in February. So that's to me how I look at the independent sponsor market, right? You can have larger, sophisticated players not eke it out, not make it, but a hustling individual or group with niche specific experience that's differentiated, that cares, that's local, can actually, end up in a situation that was better than before. And I think that if that's the mentality of sponsors going into what could be the next downturn, it's an opportunity to make a lot of money.
Great.
And Christian, Renny, Whit, anything to add? You have a couple minutes, but
Yeah, I mean, what you're touching on really is the underlying core thesis of why we like the small buyout market, why we've always been investors in it. It's because of that hands-on hustle that takes place, that there's a way for the business to live another day. If you live another day, you get the opportunity to get a return on your capital.
I think it's right. I mean, there's always going to be good small cap businesses. There's always going to be good family-owned, entrepreneur-run businesses. I think when you hit said recession, we saw a microcosm of it last year when kind of the whole world kind of froze up, and you talked about a couple of the deals that you guys were able to kind of do during that period. But, so we did see that microcosm. And I think, if we can have good GPs who have their hands on these businesses that can help them get to the other side of whatever a troubled situation looks like. And that is going to involve some hard work, right? When that happens. But, and everybody in this room knows this, there is so much private equity capital sitting north of the ecosystem that we're talking about today. So if you can create and grow kind of good businesses, get them to an institutional standpoint, whatever that number is, 8, 10, 12, 15 million, there's a really, really nice investment thesis to continue to kind of sell up the food chain and do well by your underlying investors.
Yeah.
I guess I'll just leave with the last thought. When a recession comes, in our opinion, it's time to go on the offense, right? With that note, how we assist our portfolio company during the pandemic, and a lot of these, well, all of them are lower middle market companies, right? Which means they're mostly family owned and entrepreneur owned. They did not like to go through a pandemic, probably the second time by themselves, right? And there's something that you can talk to your target companies or entrepreneurs you're building a relationship with, look, recession is going to come, it's just the nature of the world. Are you going to be ready for it? Or are you going to have a partner that can help you through it? It could be something in your arsenal that you go out and talk to these business owners, that, hey, we can help you if that time comes, we're ready for that.
Yeah, it's important to show your sense of partnership at that time.
Yeah.
We had some legacy. Last spring, we had legacy fund commitments and they were about to make capital calls. We typically would fund on the due date of the capital call. We funded on the day they sent out the calls just to show our support. We had a couple of instances like Eric was describing of companies that went to zero revenue for a couple of months. When we were there on day one saying we have reserved capital for this to happen. We're going to see this through. There was one sponsor I saw yesterday. First time we met in person for the past 18 months. We must have had 50 Zoom calls in the past 18 months working this business back. And it's, as Eric was describing, back on a very positive trajectory. I felt like hugging him. I mean, it was that kind of sense. I mean, we're in a professional setting, but we did it. But it was, that's what you want in capital providers. That's what we're looking to build as relationships.
Well, clearly everybody in this panel is there for the long haul. But I do wonder, all great points, but I do wonder how does that affect certain senior lenders? How does that affect there's more competition, certain equity providers that say, oh, this is hard. Oh, I have to put more money in. I have to do all this. And I do wonder how that might cause a temporary contraction. It's not going away. But that's why it's kind of like know your partner, know your lender. Because I think some people haven't seen the hard times, so they think they know the time they're going to have to spend, the money they're going to have to, put forth, but it's a different story when it happens.
I love that one of the key themes up here is what we all know, but reiterating it, that the relationship is so important. Trust in your partner is so important. And I want to thank all of you for spending time talking to us today. Your expertise is beyond appreciated. And for the group, we're on a break until 11. So I hope everyone enjoys the next 45 minutes or so of networking and coffee or whatever you need to get.
Thank you.
Thank you for having us.
Thank you.